Welcome once again to Pro Accounting Academy. In today's video, I'm going to take you through a practical question about income statement. We are going to look at a question. We try to determine whether this company made a profit or incurred loss in a given year. So you have to be observant. I believe you have watched our previous video about income statement where I gave you the format. Meaning here, we're just going to try to calculate a number, assuming already you have the format. If you have forgotten this format, you can pause, go back to the other previous video, you try to go through the format for preparing income statement. So let's take a look here. Let's take a look at this, our practical example about income statement. As I told you, they can prepare for you trial balance because they're going to summarize our ledger accounts and they will summarize in the trial balance. Then after they ask you to prepare income statement. They may not even give this information in the form of trial balance, but they can give you a list of balances from different accounts. Then after they ask you to prepare the income statement. Let's take a look at this. I look at this, the following relates to a trial balance of iron traders as at 31st December. Meaning this income statement, this business, its accounting period ends on 31st December. Of course, this was 2020. They are giving this is trial balance. We talked about it. It is just summarizing. As I told you last time, that the trial balance summarizes the statement that summarizes balances as extracted from ledger accounts. For example, here they have included sales 4 million, which is here. They are showing us opening stock given there, carried outwards, returns inwards, discount allowed, interest received, purchases, rent and rates, salaries and wages, carried inwards or carried on purchases, water bills, electricity, maintenance fee, discounts received, machinery, building, capital, motor van. And then we have our total. As I told you, the total balance has balance. Debit side must be equal to credit balances. So that's why we are seeing here we have 9,815,000, even here 9,815,000. However, they're adding even, they're giving our information here, additional information which is outside the trial balance. Closing inventory also as of 31st December 2020 was 75,000. Prepaid rent and rates 9,000. Unpaid salaries 4,000. Then they are giving even the depreciation, our machinery and motor van 10% on straight line method or basis. Are required because in this video we are going to prepare Ayani's income statement for the year ended 31st December 2020. So when you find such a question, it becomes very easy if at all you understand the format for preparing our income statement. So we are going to use the format I gave in our previous video. Then we try to simplify this one. However, as we are preparing our income statement, don't forget, income statement we only look at nominal accounts. Which nominal accounts? We are looking at only revenue, only incomes and expenses. We are looking at income, expenses, gain and losses. We don't take our real accounts like assets, liabilities, equity in our income statement. So let's try to take a look at this number. Alright, this is the format we are going to use as we are preparing our income statement. When you look at this format, it is clearly resembling what I gave in our previous video for income statement. It has the title. It's very important to put the title for the company you are preparing a financial statement or income statement for. Then you put the particulars or details. Some people may put details, no problem. Here it can be details or particulars where we're going to put all our details. We shall have 3 amount columns, and the purpose of the 3 amount columns is to show even our working from some of these columns before we get our net or final answer. So as we remember our format for income statement, the first element, we are starting with the first element of income statement. That was sales or revenue. So you need to bring sales here, or could be what? Revenue. You go to your question and you go through. This question will be presented. They will present a question like this. You go through line by line to identify the sales or revenue given. When you look at this question, the sales is clearly given right there, which is 4 million. You pick your 4 million, you bring and you record it here. And as I explained, I told the reason why I'm recording it here, I need to make any adjustment in regard to our sales in the form of returning inwards. I can subtract from here, I can do my working from here, so that when I get my net sales, I can put in our last column. So you need to go through still the question. If you are provided with returns inwards or sales returns, you have to bring and you subtract from our sales so that you can determine your net sales. So let's try to go through here. You go line by line till when you find returns inwards or sales returns. Yes, it's right here. Returns inwards or what you call sales returns. You pick and you bring it here less, subtract returns inwards or sales returns. How much is it? When you look here, it is 100,000. You bring it here, 100,000. And when we are subtracting, we usually put brackets. This bracket means you are subtracting. So someone can use minus sign, but it's prefer to use the bracket. Of course, any accountant will understand that once you find the bracket, you are subtracting from our sales. Then here, once you subtract, you get what we call net sales or net revenue. Get this minus this. You put this to show that is equal sign. 4 million minus 100, then you get 3,900,000. Good. Now, clearly, it is very, you can see, we have our revenue for the whole year, that is 2020. We have subtracted all returns, which may be goods which are returned by the customers, the business for the whole year, worth 100,000. Once you do that, you come with what you call net sales. I think from today, no one will ever fail to calculate net sales. Net sales is very direct like this. If it is given and you have the question where you have net sales direct, you don't need to go through all this work. You just need to start with net sales and put it there. However, chances are high that the net sale will not be given. Of course, you start with sales, subtract returns inwards, and come up with net sales. According to our format for income statement, after getting your net sales, you need to subtract cost of goods sold or cost of sales. Subtract cost of sales or cost of goods sold. I told you this one. If it is given in our question, you can put it direct. Let's try to check whether it is there. When you go line by line, sales, opening stock are all these items. Then even you check the other side, I'm not seeing cost of sales anyway. Meaning it is not given, but you need to find that. If it is not given, I told you not to calculate. Suppose cost of sales was here somewhere, and there is a figure for cost of sales, becomes very easy. You just pick and you put cost of sales, you subtract it here to get gross profit. But the moment it's not given, and as I told you, chances are high that they will not give you cost of sales, because we need to determine, we need to test you. Do you know how to calculate cost of sales? So you have to calculate it if it is not what? It's not given. How do you calculate it? I told you we shall start with our opening inventory or stock. You check the opening that is at the beginning of your trading period. When you check here, we have opening stock, opening inventory. Even when they don't tell you that this is opening, and they put just here inventory, but in the bracket they put 1st January, maybe at the beginning of the year, at the beginning of the trading period, just know that is opening stock. Or any stock we find in your trial balance, that will be our opening stock. It is 120. You bring it here, 120,000. After that, you add our net purchases. We are going to add net purchases on this opening stock so that we can determine the goods available for sale before even getting the cost of sale. Remember, to get cost of sales, it's going to be goods available for sale minus closing stock. However, even getting goods available for sale, it will be opening stock plus net purchasing. Meaning, still I need to calculate here net purchase if it is not given. You need to go to the question there. You try to go through any item related to purchases, which may include purchases, may include carriage inwards, may include returns outward. You check. When you check here, we have this one, returns outwards or purchases returns. Purchases, returns. That makes part of our purchases. We shall subtract, it reduces our purchases. Then when you go through here, carriage inwards or carriage on purchases, still we have this. And when you check here, there is even purchases. So we are going to deal with returns outwards or purchases returns, purchases themselves, and even carriage. We have to deal with those also so that we can determine the net purchases for this thing. Now, how do you do that? You start by listing the purchases. I'm trying to determine the net purchases, anything related to purchases. Bring our purchases here, it is 720,000. We can add carriage inward, that is transporting. We can bring your goods to your business. They are part of purchases, carriage inwards or carriage on purchases. How much is that? Carriage on purchases, take 10,000. Good, 10,000. Then you less or subtract returns outwards. Returns outwards. Remember, returns outwards, those are goods returned back to the supplier because of different reasons. Could be the expired, longer order, the wrong quantity, among others. So the moment you return back to the supplier, they reduce your purchases. How much are returns outwards? 8,000. We are subtracting. Now, when you get your purchases and your return, all right, you subtract returns outwards. When you look here, our returns outwards or purchases on returns is 150. It's not 8,000, but it's 150,000. So when you get your purchases, you add carried inwards, you subtract returns outwards, automatically you get what we call net purchases. And net purchases, when you check here, it will be 580,000. Now, this takes you to what I communicated. I said we are trying to here, before you think of getting cost of sales, it's very important to understand the goods available for sale. And to get the goods available for sale, it is our opening stock, this one opening stock, we add our net purchase. So we can easily add this plus this. The purpose of these columns you are seeing to arrange in order our figures. You can't add something which is here on this figure, which is here. That's why I'm trying to align the opening inventory here and our net purchase here, so that once we add, we can get what we call goods available for sale. No one will give you this. You have to determine it. If you check in our question, you can't find goods available for sale. You can only find it by using this formula, by getting opening stock plus net purchases. So when we add our goods available for net purchases plus our opening stock, you will get 700. You bring it here, 700,000. Hope we are moving. The moment we have goods available for sale, and don't forget our target was to get gross profit here. And to get gross profit, it is net sales minus cost of sales, but we didn't have cost of sales. That's why I had to take you through this working to determine cost of sales. So the moment you have goods available for sale, it's very easy. You just come here and you subtract closing inventory. Stock at the end of the year, closing inventory. Stock, how much is it? We can check here. I told you have two stock or inventory. You have inventory at the beginning of the year and inventory at the end of the year. In your trial balance, even if they don't tell you, just get it from today. That in the trial balance, you find what we call opening stock. Then outside trial balance, we shall find what we call closing stock or inventory. So it's here, even here is stated 31st December, meaning this is our closing stock at the end of the year, which is 75 what? 75,000. So when you get here, you subtract 75,000. So our goods are available for sale, less closing stock, you automatically get our cost of sales or cost of goods sold, cost of sales. When you subtract here, when you subtract our 70 from we shall get 6,250,000. I think it sounds good. Just get 700, that is goods available for sale, minus closing inventory to get cost of sales. So when you get your net here, don't get confused. We have net sales, which is this one here. When you get net sales minus this cost of sales, when you're subtracting, I told you put bracket. Simply just get 3.9. When you subtract 625, you get what we call gross profit. Which gross profit? This net sales minus cost of sales, which is 3,275,000. Hope it's right. That is our gross profit. I told you when you reach this step, you are happy with the number you are moving. This profit is from our core activities, but you may earn some income from other sources, which is not from your core business activities. Maybe like discount receipt, commission receipt, anything receipt. Even when you don't know which one is other income, go there in your trial balance. You check any item with the word received, not receivable but received. Then we shall identify that as our income. That's why we are saying you add other incomes received, not receivable but received. You go to your trial balance here. I say you may not be sure which item is under or lying under other incomes received. I'm saying once you find any item with the word received at the end, not receivable but received, then it qualifies to be under our other income. For example, opening store, current outward, returning what we have here, discount allowed, but we have interest received. This is what I was talking about. Discount, interest received. You may have items like, let me first take this. Interest received is 20,000. Interest received is 20,000. You go through line by line to find whether there's any other item received. Yes, when you check up there, we have our discount received of 15,000. You bring it and you add discount received of 15,000. You add to get total other incomes received. When you add, that's qualified to be 35,000. 35,000. So when you get our gross, this is gross profit. You can see it here. Gross profit plus other income, you come up with what we call gross income. That is gross profit plus any other income received. And that is going to be our 3,275,000 plus our 35,000 to get 3,310,000. 3,300,000. Hope it's correct. 3,310,000. The moment you reach gross income, we are almost completing our income statement. We are almost completing preparing our income statement. You go and check what we call operating expenses. Operating expenses. What you do is operating expenses, you subtract the less operating expenses. Any expense you incur to run the business. I talked about like salaries and wages, rent, water bills, among others. Here, go line by line, identify the operating expense. Let's start. Opening stock, carried outwards. Before we go through this, it's advisable to first look at additional information because they may have included something in regard to our operating expense. For closing stock, already we have used the 75. But we have this prepaid rent and rates, 9,000. You go to your trial balance, you check for rent and rates, you put a star. When you put a star, it means it has some attachment and additional information. We are going to handle that. You check unpaid salaries. Still look for salaries, put star. Say start by identifying the operating expense which have attachment with additional information. Put star so that you can remember that you have to do some small working there. Then we have unpaid salaries. Okay, this we have seen. Then you have depreciation of machinery and motor vehicle. Then you look for machinery, it's there, and motor vehicle, which is here. After that, first pick operating expense where you have not put star, you just record an operating expenses. For example, carriage outwards, you bring it here. How much is it? 30,000. Carriage outwards. Outwards, which is 30,000. Then we have carriage outwards. Returns we have already used it. Opening stock we have used. Sales we have used. Returns outwards we have used. Discount allowed, yes. Discount allowed is an expense. 8,000. Discount allowed. 8,000, correct? Yes, 8,000. We put it there. Then you go line by line so that everything which must be included here is being included in the income statement. Purchases we have already used. Rent and salaries, first leave, we are going to handle, but they have attachment. We shall do some working. First, identify. You know, when you go to the garden and you want to get mangoes, you start with the mangoes which are near you. So the mangoes here which are near us, all the expenses which are near those expenses without any attachment. Start with those ones, pick them, and you record. So we start by recording expenses that do not have any additional information. We have carriage inwards, so already we have used. Water bills, no attachment. You bring, we call water bills. Water bills, how much? 2,000. Then we have electricity, 3,000. Electricity, 3,000. Wood. Then when you look at all this, we are going through. We have maintenance fee. Maintenance fee. Maintenance fee is 5,000. Then we have discount received already. We have used machinery, building, capital, and motor van. All these items here, from here to there, those are real accounts. Remember, I said real accounts. Those accounts that talk about the assets or record the assets. They record liabilities and equity. So those ones we don't record them in our income statement. However, for assets, if there is any kind of depreciation, no depreciation is an expense. So we need to bring that expense of depreciation and include it here. But before I go into that for real accounts where we shall pick depreciation of our assets, let me first go back to operating expense where I put the star, meaning they have some additional information. What do you do? First pick this, you record in your first column. Rent and rates. Rent and rates. How much is it? 49,000. 49,000. 49,000. Now, let's look at the additional information regarding rent. This shows the expense, it was 49,000. But they're telling you, please wait, you are paid rent of 90,000. Prepaid rent means the rent paid in advance. So when you are paid rent in advance and you're determining the actual rent for this year, we need to go and subtract rent they paid, because was paid in advance for this particular year 2020. So when you find it prepaid, they can use what like a prepaid or payment in advance. You need to go and you subtract that what? You subtract that expense. So here we shall subtract less prepaid rent, paid rent, rates for which is 91. You subtract, then you get the actual rent and rates of 40,000. You see now how our rent is reducing, because the landlord may be telling you, please wait, you are paid already for 9,000 in advance. We shall subtract, and the rent for this year will be reducing by that repayment. That's why we need to look at additional information. If there is anything regarding any operating expense, we can make that adjustment. Let's look at unpaid salaries. Yes, the way we have done here, we call the salaries. Salaries, that is 156,000. 156,000. 156,000. 156,000. You let's look the attachment regarding salaries. They are saying salaries unpaid. Now, as you are making salaries for this, you have salaries to pay for this year, but someone says, please, you wait. Even it is unpaid or outstanding or due, salary due for last year or for previous month, please, we bring and we add on salaries for this year. So we shall add our unpaid. Whenever you find unpaid expense or expense outstanding, it can be salaries outstanding, electricity outstanding, unpaid, due salary, all that, you have to pick it and add on your expense for that particular year. So here add unpaid salaries. So it was unpaid salaries 4,000, right? 4,000. So when you add here salaries, it will come to 160,000. Good. When you go through all this, at least we have tried to capture all operating expenses. Don't forget, I told you, in income statement, we don't include the machinery building, or don't include the assets. We don't put liabilities. We don't put capital or equity. However, if there is any information concerning the depreciation of that asset, we calculate. Remember, depreciation is an expense. We shall calculate depreciation and bring. Look at this additional information. If they have given you assets there in trial balance, but other additional information, nothing concerning depreciation, don't calculate anything. You just stop there. You don't bring this here. But if there is the information like this one, depreciation on machinery and motor van is 10% on straight line basis. You just come here and remember I told you when they talk straight line basis, it is cost method. Meaning, if I'm to calculate depreciation on machinery, this machinery, yes, machinery depreciation for machinery, and this straight line method means at cost. It is going to be this percentage given, which is 10 over 100 times cost of machinery. Now here it's going to be 10 over 100. This is your side work. You do it from outside, not in our income statement. 10 over 100 times machinery, which is 10,000. Here you are going to get your 5,000. You get your 5,000. Alright. Get 5,000. You come here and report depreciation. Then depreciation, we shall have machinery, and even you have motor van. For machinery, we have seen it is 5,000. 5,000. Then for motor van, you do the same. You do this calculation here. Motor van, still it is 10. Motor van, it's going to be 10 over 100 times this cost of motor van, which is 6,802,000. Then when you get that, when you try to calculate 6,802,000, you are going to get your depreciation as 6,802,000. Simple. Now, when you look at our question, I have tried to look at each and every item of what we call your nominal accounts, like the revenues, expenses, the losses, all that are included in income statement. The only item I have not included in our income statement is capital. Remember, I told you income statement will only record the nominal account. Which nominal account? Those accounts that talk about incomes, expenses, gains, losses. The rest, like real accounts, like capital account, assets will be taken, even liabilities will be taken to our balance sheet as when we get them. Every information given to you is not supposed to be included here. Don't forget, you only include nominal accounts or expenses, incomes, losses, and gains. Having done this, your operating expense, now we can get total operating expense. Total operating. Yes, after that, you can now add. We have already recorded all our operating expenses. So you can add right from here, 30,000, 8,000, 2,000. You add all this total, and then your answer will be, when you add, you can get 933. It is 933,200. 933. This is 3, sorry. This is 3,200. Now you have all your operating expenses, even you have your gross income here. So when you look at this is your gross income here. Gross income is here, you have operating expense. So when you get your gross income, you subtract your operating expense, this one. Automatically, you are going to get your net income. Your net income of 3,216. Net income of 680,000 as our net income or net profit. Net income or net profit. Say this is our gross income, which is 3,310,000. You subtract operating expenses, you add all this. Once you add all this, line by line, 30,000, 8,000, 2,000, you add all these operating expenses, of course you will get 933,200. Then when you subtract this 3,310,000 minus this, automatically you will get 2,376,800. And the question was to prepare our income statement. And the target of our income statement is to determine the net income or net profit for the business. Hope you can see that the moment you master the format, preparing income statement becomes very simple work for all of us. Start with mastering the income statement. 2, the formula for income statement. Number 2, try to understand why are you preparing it. We are trying to determine whether the business has made a profit or has incurred a loss. This is the process we go through as we are preparing our income statement. If you have benefited from this video, if you have understood our income statement, If you have understood this, please you share with others and try to practice. Accounting is all about practicing. Preparing income statement is really very easy for all of us. The moment we master the format, any question they present to you, you can as well deal with elements of our income statement, as I have already communicated. That include the revenue for the business or sales. You look at cost of sales, you look at the gross profit, you look at other income received from other sources, you add on your gross profit, subtract any operating expense, and you get your net income or net profit. Don't forget, if you have been provided with things like interest paid, maybe taxes, the moment you reach that part for operating profit, what do? You subtract the tax so that you can get profit after tax. But we shall be looking at such numbers as we look at different questions for income statement. I understand it has been a bit long number, but we have tried to break down for you. In case of any question, you put the comment section. Please, you put it there. We shall come as well and we'll explain very well. Thank you very much. Keep yourself with ProAccounting Academy. Don't forget to subscribe, share, and like the videos. Meet you again.